Well, thanks for coming to my presentation. I'm very happy. I would like to thank Dr. Damer for offering me this opportunity, as well as all my colleagues here. In fact, this topic, I can say that it's the researcher discussed this topic maybe since 1990. But in 2006, there was a research published within a conference. I don't remember the conference exactly, but it was Professor Masbol, and he reflects in his research how important is lean accounting, and many research come after that. In fact, I found a good opportunity to talk about the paradigm of lean accounting. However, there are many criticisms, as we are going to see, to this account. So, I don't know why it's
not working? By hand,
okay, yeah.
manually. Okay, it works.
Okay. So, my point of focus here, I'll be presenting the topic from four, or focusing on four, let's say, titles. Is lean accounting feasible to be implemented? And what are the implications of such a technique, of such a system of accounting on the investors and stakeholders? Then, in fact, when I was preparing this, I thought, I don't want to be theoretical in my presentation, I need to go directly to a comparison. When you put figures in front of individuals, they can discuss with you. So even in many decisions, political decisions should be based on figures, finally. Change needed for effective lean accounting. So if we have the intention to implement it, what change we need? Many changes are needed in this concern. Feasibility of implementing lean accounting system and its implications on the investors or stakeholders. When considering lean accounting, we are in fact here, we are aligning the value stream with lean principles. And this is initial thing that a company must do before initiating lean costing. So, lean accounting itself, it has four fundamental objectives: offering accurate, real-time, and simple to understand information that motivates decision processes that aim to support improved cash flow, growth, and profitability. Achieving waste elimination through cost control, lean techniques, lean thinking. After a short time, we have a diagram here about the lean thinking model. Also, the compliance with the gap. It's a big challenge in this concern, because you are talking here about removing many accounting transactions will be removed. I mean, we are going to eliminate many transactions. We are going to restructure even the accounting cycle in terms of cost. It's gonna be restructured again. So here the compliance with the principles of gap is very crucial for such implementation. Then the lean manufacturing, which is in fact applied. We can say that the lean manufacturing is applicable in Japan, applicable in the United States, applicable all over. Though many companies now are implementing lean manufacturing or working under the umbrella of lean manufacturing philosophy. So, support lean manufacturing through supporting investment in people via continuous improvement programs. Proponents of lean accounting, they say that lean will create cash, will save time, will improve capacity in accounting systems. Lean strategies help to reduce volumes of transactions, as I was saying. So, volume of transaction will be reduced. Time of achieving will be reduced, and this time can be used in other activities which create value. So here we are talking about the value stream. Take care that the implementation of lean, you need here to emphasize the value stream way or the value stream managerial practices. What is the problem in traditional costing? So far, or let's say even when I have studied the traditional costing system, they are striving to save money. Lean costing want to create cash. So here the target is different. Profitability versus cash. This is the problem, in fact. Traditional costing, you are looking for profitability. You are targeting to achieve profitability. In lean accounting, you are targeting to have cash. Whenever the time is needed cash, it is available. So there is a case to explain this. Reduction inventory also should help or will help the company to eliminate perpetual inventory system. You can imagine the efforts done while following the perpetual inventory system. You need to count inventory. You have a perpetually system of tracing the cost of goods sold. You need to know the cost of ending inventory. So this is perpetually done. This take time and also cost, because here there are people who are working for to undertake this inventory system. Also, the standard costing neglects the relevance of the existing firm's capacity when making buy and sell decisions. A company pursuing traditional costing assumes that it has achieved full capacity. So the company pursuing this traditional costing, there is assumption that it has achieved full capacity. Why the implementation, why of implementing lean practices? Many organizations today have focused on driving efficiency and waste reduction. This is, at the end, we're gonna see that we can have profitability through efficiency. This is at the end when I conclude. And waste reduction. Also, organizations accomplish this through deployment of lean manufacturing and production approaches. Lean accounting will complement, will treat the lack. Still, this lack is because as I have told you, many companies all over the world, they are practicing lean manufacturing. They have succeeded in practicing such technique. However, the lack is apparent in the accounting system. So you cannot use traditional costing with lean manufacturing. Here there will be a gap. There will be a problem, and especially in the performance, in the measurement of performance. So lean accounting here will complement the lean manufacturing to help achieve reduced inventory, elimination of waste, good cycle time, improved customer service, and customer satisfaction. Traditional accounting systems have tended to utilize absorption costing, which allocates overhead. Here the case will come. The allocation of overhead cost to the production of the current year. This has an implication of lowering the average per unit cost. Okay. Type. Value stream as a tool for lean accounting. Let's say that the value stream, we need to have this. It comes later. Okay. We need to redefine the value stream. Number one, to redefine the value streams in our corporation. With the introduction of lean accounting practice, organization will need to shift from, and this is a requirement. You can see, this is a requirement. We need to shift from the incentives based on performance toward a reward system, a whole reward system that acknowledge the value delivered by lean goals. However, value stream as a conceptual tool allows for reduced volume of inventory, simplified operations, and elimination of wasteful activities. This is the case. In fact, the case, it's about manufacturing concern which utilizes overhead costing, traditional cost structure, Currently, the company has an overhead of $100 per unit with fixed overhead of 250,000. The yearly demand of the customers is 2,250 units. During the second year, the company decides to increase production by 250 beyond the actual demand from 2,200 to 2,500. This step is meant to ensure optimum utilization of the company's machines and people. Yeah. They took this step for so. Okay, assuming that the company adopts lean manufacturing and produces at a level equal to demand, the average cost per unit would be 211. During the second year, overhead or absorption costing, the production manager decided to leverage the fixed overhead to manufacture in excess of 250 units. And the outcome will be like this. Below is the outcome, so you can see that the unit has been reduced to 200 per unit produced. This is the cost of production. Let's have this comparison between cost or in-cost statement. Here in the mass production system, beginning inventory, direct material purchases, direct labor, indirect manufacturing overhead cost, subtotal, this is the numbers, and then this is the revenue, and up to here we have profit pre-tax 800,000 and cash flow pre-tax 800,000. Beginning inventory, this is the lean. Huh? Direct material purchases, direct labor, take care of that. It was 950 and it becomes 500. So here, this is number one. Direct labor, indirect manufacturing costing, subtotal, minus ending inventory, take care here, 1,450,000, huh? And here 150. Total cost, revenue, there is a loss. And this is the reason why production manager, or why, let's say, accounting practitioner, they are not for. Okay, lean accounting has proponents, many proponents all over the world, I have told you. But also there is another stream against the idea, against the, okay, we can have lean manufacturing, but lean accounting, how we're gonna implement? We're gonna have loss. Look, this is a loss. So, in the short term, yes, there will be loss. In the short term, it will be against profitability, it will influence profitability. But in the long term, it has a strategic vision. Lean accounting in the long term will benefit the company. The organization will benefit from it. On the long term basis, it can be very useful. And also, we are going to see that lean accounting will increase cash flow also. This is what I in the previous slide. Lean creates cash. Yes, it creates cash. And now the current problem for all over the world, for Greece, for many countries, even the United States, is lack of cash. So it's a medicine, a medication now, which should be, because this is our current problem since 2008. We are suffering, all of us. So the cash flow pre-tax will be 1,250,000. So there is a cash flow. How we can have enablers of lean thinking? Here we need teams. We to have those enablers, we need to form teams that implement, or that can implement the lean thinking. Organizations that implement lean thinking appreciate the significant role of teams in organizations. So, a lean philosophy, the formation of the work is done through teams. No more individuals, or no more one who come and say, I am the one who did the work, or I am the one who invent, or I am the one who no. Now it's time for forming teams and teams also should be selected in a very accurate way, because this is another problem, building up the team in management. Okay. Research showed that lean manufacturing incorporates all departments in working toward achieving lean goals. Look, I don't want to, because 5 minutes, this in fact, I will leave the presentation here, but also I need to go through this. This is the lean thinking model, and we need to understand the model to understand how we can achieve this. So in definition of value, organizations that don't create value for their key stakeholders often lose relevance and support. In defining value, it's essential to determine the sections or persons undertaking to define organizational value. And this is contrary to the thinking that organizations should define value. Lean thinking dictates that customers define value in the production processes and products. So customer will be the guide for such definition. Number 2, identifying the value stream. It will be critical for an organization to incorporate all value-added activities that enhance the delivery of quality products and services to customers. Arguably, these functional elements stretch from internal and external activities, and this will require employees to understand all organizational functions through customers as magnifying lens. Step number 3, it requires that a company delivers successfully the value created to customers, and there will be a drift from the traditional era of mass production that embraces a functionally organized batch and queue production. This approach often leads to inventory buildup, unsatisfactory inventory cycle time, repetitive work, excessive waste. Implication of lean accounting on organization will be a production approach that integrates all people from physically separated and specialized departments. Implementing a pull system, the 4th step, very important because it will entail implementation of a pull system where customers' bargaining power overrides an organization's internal processes, and here customer demands determine the production level. So the customer is the one who determines the production level. And number 5, the strive for perfection. A company would want to strive to have a perfect outcome, and this will mean that organization should improve service delivery through strengthening frontline employees. The organization must move from a situation where traditional firms relied on top managerial teams to initiate decisions and appreciate subordinates as key components capable of stimulating improved flow of production. Finally, I will end my presentation by this. Yeah, there is another, but this is very important because implication for accountants who want to work as lean accountants to achieve this fundamental shift from traditional management account, I mean here the person himself, the management accountant, toward the focus on value creation would require that an organization makes change in all accountancy work. Therefore, the role of management accountants shall change significantly, turning accountants from number maniacs, because accountant now he's interested in numbers, so you turn him from number maniacs to people who should understand how work is done. You will build the knowledge, their knowledge will be built up to the floor operations. So the accountant should understand here, if you want to get incorporated as in the lean enablers, he should understand here the operations floor, at the level of operation, the floor operations, the details of work, even the engineering work he should understand, even the production work. And this is not a big deal for an accountant because already he is a challenging person, so he can understand if they explain to him. As for me, for example, I'm working with many, we have our college, it's an industrial college, so we have electrical department, power electronics, mechanical, geomatics. as accountant, I'm saying now, I go to every HOD in his free time and I start to ask him how is work done. For example, those of geomatics, how that there has been alternations pertaining the scope of work of management accountants, and researchers have expressed their opinion concerning the lack of satisfaction experienced by managers on the ability of traditional accounting to deliver accurate data. So I think enough.
Yes, thank you very much
thank you.
for respecting the lean timing.
Thank you very much. Look, I was trying to focus on the main important.
Yeah, that's good, great.
Okay, there are another details, but let's see the questions.
Yes, we get one.